Welcome to another edition of Zach's Rank Buy. I am Brian Boland. I'm the aggressive growth stock strategist here at Zach's. I got two more stocks for your aggressive growth radar screen. And we've got two A stocks. They start with the letter A, and at least their tickers do. And they both posted beat and raised quarters, but stocks have trended lower following that. So let's take a look at what's going on in this market, what's going on with these two stocks, shall we? All right, here we go. First one is Astera Labs. Astera Labs, as you can see the names right there, it's ALAB. ALAB is the ticker. This Zach's rank number 2. That's a buy. And then an A for growth and an F for value. That's the growth divergence that I love to see because we know that growth investors and value investors are inherently looking for different things. So when I see the divergence there, the difference, I know that I'm on the right path already. All right. Pretty big cap company here, $12 billion market cap, nice and liquid. But here we see the stock up at $140 at the end of last year, and then big decline. This was the DeepSeek news here, like DeepSeek's going to ruin AI. And then we have a quarter right here, quarter earnings right there, and we beat, and we get, and the company provides higher guidance as well. Stock sells off. So normally, when you see a beat and raise, that's 6 months of good news all in one day. 3 quarters of the last 3 months came in better than expected. The next 3 months are going to be better than expected. That's why I call it a beat and raise, 6 months of good news in one day. But this stock has continued lower here. I'm going to say part of the reason for that is the valuation is 60 times forward earnings. But these AI stocks are hot. There's questions around the DeepSeek, or are we going to continue to spend? And this is a cloud infrastructure with the AI overlay. So let's take a look at our numbers here. We love to see. Are you beating the number? You crushed it. That was probably one of their first reports out there. Then the analysts kind of get a clue as to what's up, and they just keep on outperforming as we see the numbers. Except for the move from this quarter to this quarter, we have an acceleration in the amount of the beat, as well as an acceleration in the absolute number. So on the bottom line, things are looking better and better. Now for the estimates, we're going from 25 cents to 28 cents. That's an up arrow, poorly drawn up arrow, but an up arrow nonetheless. That's a little bit better. 26 to 30 cents for the fiscal year 2025. We're going to go 113 to 125. And this year's a long way off, and that's going to be actually a down arrow, but it's a penny, and we're a long ways away. I wouldn't be too worried about that right now. I'm saying that things are looking good. Now, we're going to cheat a little bit here. For the current year, this is fiscal 2025. We got $670 million in revenue. It's going to be 69% revenue growth. It's going to slow down to 32% revenue growth, but, a long time again. We've got a long time, and those estimates can move higher. So let's take a look at our valuation. As I noted, 60 times is a healthy amount to pay. But look at our top line growth, 180%. That's great. Price to book, 12.45. This is an asset slim business. I would expect these numbers to be big, 31 times sales. That's a lot. We're going to grow into it. Operating margins are improving. They're still negative, which we don't like to see, but they're getting better all the time. This stock has been beaten down following a beat and raise quarter. So here's our chart. We haven't been around. The company hasn't been public for that long. After an IPO, we often see companies slip up, but then it's like, oh my gosh, NVIDIA's crushing it. This has got to be a play that's going to help the AI type idea. But then maybe a little overvalued, but we post a beat and raise, but we're still trending lower. And it is, makes you scratch your head. What's going on? We're $73. I would figure fair value for the stock is 90 to 105, somewhere in there. We can see that there's good growth on the estimate lines. So I'm putting this stock officially on your radar screen. It's Astera Labs, ALAB. All right, next one. I think a lot of people are here for AppLovin. AppLovin, APP. It's an A stock. Okay, we got a Zach's rank at number 1. That's a strong buy, and that means earnings estimates have been moving higher. We got an A for growth and an F for value. We've got a $107 billion market cap, and we've got a wild chart here. beat and raise. Stock goes up from 380 to 500, and now we're all the way back down to the 320 level. I think this stock. Well, all right, so let's just cut to the chase on this one. There's been so many bear reports, short and distort is what we like to say. You distort the data, you tinker with the facts, and then you say this stock isn't worth anything, and you get people to induce the panic, get them to sell. So normally when they have the short reports, that's what they do. They distort the data, right? But then the company comes out, and now normally when there is a little bit of smoke and there is a little bit of a fire in the smoke, it takes the company a while to say, like, how best do we do this? Because we can't just say no. We do have an issue, and there's obviously the example of SMCI, which was getting blasted after Hindenburg report. But AppLovin has been hit by Fuzzy Panda research, and Culper research, and Bear Cave research. So they're all just kind of repeating the same thing. Fuzzy Panda had a sensational little video out after it. But I'll tell you what stuck with me with the Fuzzy Panda report. They would say formers said this. And of course, the implication is former employees, but that's not what they said. They didn't say former employees. They just said formers. Formers could mean basically anything. So I'm doubting the short report. And it seems like they all kind of, team up on this thing and gang up on it. So let's see what the numbers are. We've beaten it 4 times in a row. And, on an absolute basis, these numbers are all moving in the right direction, up and away. And the beats are getting kind of bigger. 17 to 15 to 31 to 29. So bottom line seems good. How are the estimates going? $1.30 to $1.45, $1.39 to $1.56. It's up. $5.89 to $6.87, $7.31 to $9.42. That's a big time move up there for next year's earnings. Well, what about revenue? $5.67 billion this year, 20%. And we're going to make about that 20% next year. So nice, good, stable, big top line growth grower. You're going to pay up for something like that. But you're only going to pay right now 46 times to get 20% growth rate. So 2 times your price to growth type idea. Although you're posting 44% top line growth. So on just your 1 quarter there, you're buying the growth amount. That's not too bad. 114 times price to book. So it's very asset thin. And the sales number could be even higher. So I'm seeing these numbers here. What's our margins like? Our margins are skyrocketing. 21 to 26 to 33 over the last 3 quarters. That's huge. All right, I'm officially on board the AppLovin idea because I don't fully buy into the short thesis. I remember when this stock was under 10 and I said no thank you to it for so long because I thought it was McLovin, AppLovin. It just seemed crazy. But right about here, this thing just goes to the moon. Now, it's hard to say, is that valuation worth it? Can't really say for sure, but I think the short report has pushed this stock down too much right now, and therefore I like it. So that's it for this week. We had Astera Labs, ALAB, a beat and raise. I like that stock to go a lot higher. And we've got AppLovin, APP. I don't believe the bear report. I think that stock recovers a good bit. So make sure you go to Zacks.com/promo to check out all of our latest promotions.